Welcome to the ISO Show, dispelling myths and sharing tips for success to improve your business with ISO standards, with your host, Mel Blackmore.
If you're listening to this podcast, then you're in great company. We've got thousands of listeners who have a thirst for continuous improvement and raising standards in business. Whether your interest is in quality, sustainability, or risk standards, I'd love to welcome you as a member to our online platform for all things ISO, the ISOlogy Hub. The ISOlogy Hub is the leading place to get access to all of your online resources, from in-depth training courses through to our very popular coffee break training, to templates and action plans and many other resources to help raise standards. As a member, you get access to over 100 courses, taking you from learner to practitioner to leader. The ISOlogy Hub has all the resources that you need, which will really help to make your life easier and to help improve compliance in those business critical areas. So if you'd like access to learning and compliance resources ranging from data privacy to environmental management, anti-bribery, business continuity, quality, health and safety, to name just but a few, the list is endless actually, then we'd love you to come and join us. Just head over to the isologyhub.com. Hello and welcome to the ISO Show. Well, today I'm delighted to be joined by Jay Ruckelshaus, who's the co-founder and head of policy and partnerships at Gravity, a carbon and energy management platform. Now, I met Jay at the Economist Sustainability Week earlier this year in 2025, and I was really impressed with the company ethos and what they're doing in relation to the carbon and energy management space. So rather than just get him on for one podcast, when we got talking, it seemed that there was going to be a number of different issues and topics that we could discuss that I thought that would be really insightful for our ISO show listeners, especially as I know that many of you are really keen to raise standards when it comes to carbon and energy management. So I'm absolutely delighted to welcome Jay to the podcast today. So hi, Jay.
Mel, a real pleasure to be here. Thanks so much for having me.
Great. Okay. Well, for those of our podcast listeners that don't know you, would you mind just sharing a bit of background in relation to your career and how you got involved with the carbon and energy management space?
Yeah, happy to. So, as you mentioned, I co-founded Gravity about 4 years ago, but before that, come from originally an academic background and a family of environmental lawyers. So I kind of grew up speaking and thinking about energy and climate and sustainability at the dinner table, and so it was always a topic near and dear to my heart. And initially thought I'd kind of stay in the academic world. I studied a lot on polarization and how especially energy intensive, emissions intensive industries think about topics like sustainability. And I think that'll be a topic we'll press on a bit later in the show. But I kind of realized, as important as that work is, I found my personal energy and enthusiasm to be a bit higher when I was working directly with companies and with individuals on these topics. And so I decided to break out and join forces with a couple technology leaders to bring solutions to companies to help them both measure and reduce their emissions. But I think that family angle, that kind of like personal connection that I know so many of us have to these topics, is often the one I come back to, and a real source of inspiration and motivation, certainly to keep the hard work going.
Cool. So obviously we're going to be diving into carbon accounting and software in particular in relation to verification and reporting and the importance of that. But I think it'd be good to provide a bit of an overview on Gravity itself, as a carbon and energy management platform. Can you just explain a little bit more about the organisation and the software?
Sure. Yeah, I'll offer the intro now, and as you mentioned, we'll unpack, I think, a lot of these topics. But we call ourselves both a carbon and energy management platform at Gravity because we help not only with the measurement and disclosure and reporting aspects of sustainability that so many companies are getting started with or maturing. So all the alphabet soup disclosure frameworks like CSRD in Europe and TCFD in California in the US, all these kind of new wave of sustainability disclosure regulations. But we also help them use that data to find and actually implement emissions reduction projects with a focus on those that save them money, save them energy, save them utility and other costs. And for us, that was always the real value in this market, was the ability to make it much easier for companies to report by really going upstream of where the data lives necessary for this reporting and really addressing that data collection, data aggregation challenge that many teams are still bedeviled by. But then using that exact same data to start to pre-qualify, connect with vendors. We'll talk more about this, but actually get some value from this and really connect the dots within these businesses. And so started initially in the kind of energy intensive industries, a lot of construction, manufacturing, logistics, utilities, metals, mining, energy, those kind of companies where the challenge is often enormous from a data collection perspective and an emissions perspective. So we started in those emissions intensive industries pretty intentionally so that it would encourage us to build the best possible software we could that really addressed the hardest challenges first. And since then have come kind of full circle and work with the bigger enterprises downstream, whether e-commerce or software companies, financial institutions, a broad sector agnostic approach, but I think still really have a heart from the industrial world.
Sure. So I think that obviously the topics that we're going to be covering over the next 3 episodes is going to be able to hopefully extract all of that knowledge and expertise from your brain to be able to share that with our listeners. So the theme for this series is from platform to proof. And across the 3 episodes, one of the first ones that we're going to be covering, which is in today's episode, is what is the business driver for carbon accounting and reporting. So we're going to start with the very basics. So looking at why companies are measuring their carbon footprint, what are the key drivers for businesses, and how can they maximize value from going through that process. Then in the second episode, we're going to be covering bridging the gap. So understanding and unpacking how carbon accounting software and verification work together for carbon and climate compliance. So we know that more and more organisations are starting to adopt carbon accounting software, as it makes the process more seamless when it comes to verification. But there are a number of other aspects to it in terms of how it kind of breaks down, the complex challenge of carbon accounting. And then finally, in the third episode, we're going to be covering that topic that is keeping a number of ESG leaders awake at night, and that is Scope 3 emissions, which can be extremely challenging getting started there. So we're going to be covering the topic of how to get started with Scope 3 emissions and specifically looking at value chain emissions as well. So yeah, absolutely delighted for you to join us, Jay. And so let's dive into the first topic, which is looking at the business driver for carbon accounting and reporting. So obviously with an academic background, you'll have a much broader understanding in terms of, the reasons for companies measuring their carbon footprint. So historically, why have companies measured their carbon footprint?
Yes, thanks, Mel. And I think it's a great question to start with to allow us to put some maybe context on the table that the current trends kind of fit within. And I think we're in the midst of such an interesting, honestly, evolution of how companies think about measuring and reporting and disclosing on something like pollution or greenhouse gas emissions or measuring their carbon footprint. And I think kind of historically in maybe 70s, 80s, 90s, even early aughts, there was more of a paradigm for these topics around things like corporate social responsibility as part of a broader company mission to help the community. And that was the kind of department or angle that a lot of companies did things like measuring their carbon footprint underneath. And we've had a real change in the past, really just decade or two, where what used to be, strictly voluntary, strictly under this sort of CSR paradigm, has really transitioned to be something kind of required for as a condition of doing business with certain customers who may be asking, if it's a B2B company, hey, as a condition of doing business with us, we really need you to disclose your emissions. Or perhaps they're investors doing similarly, access to capital, these kinds of core business responsibilities increasingly tied to measuring carbon emissions, greenhouse gas emissions. And then kind of one step further, and the more recent trend is actually a regulatory sort of mandated by law need to disclose greenhouse gas emissions, other sustainability metrics, other ESG metrics. And that trend manifests now in many jurisdictions, from the European Union's CSRD regulation to upcoming in California, about 10,000 companies that are sufficient size that do business in California, no matter where they're headquartered, have to disclose this information. And so there really is a broad shift from voluntary to mandatory for many companies. But I think in parallel, as real as that is, I think there's also a heartening recognition that you can get a lot of business sort of like core meat and potatoes, bottom line value from this exercise. And so we'll talk a bit more. There's many ways that manifests, but I think it's a really important, I think, sort of nuance on just now this is required. But in fact, many companies are doing this because there's a real business driver to it.
So why talking about the business value then? I mean, why is the language of business value or pragmatism becoming more important for sustainability professionals, do you think?
Yeah, maybe a few strands are kind of being braided now in an exciting way. So one is, a real professionalization of, the sustainability department that, again, used to be maybe wrapped up with many other kind of social responsibilities at companies. And that's still how it looks at some. But in other companies, there's been a rise of, for instance, roles like chief sustainability officer, which was not very widespread, even a few years ago. And an increasing alliance with the finance department and kind of more financial reporting functions, and even general counsels and strategy departments, and a real, I think, embeddedness of sustainability across the business. And what that's yielded, I think, in the other direction is, it's important not to just frame sustainability for sustainability's sake, but rather to recognize how sustainability work is strategic work for these companies, and that it can often bear fruits in terms of cost cutting and energy reduction, innovative product lines for new consumers, new markets, more favorable access to capital and investment opportunities. There's a whole range, but before chatting on the specifics, I think, just at that level of language, really, and of strategy of how this work kind of manifests within the corporate hierarchy has really gone through a very rapid evolution in just the past few years, and that's an important driver. And maybe one other one is kind of the broader macro environment. We're living in a time when energy demand is rapidly rising in many places. Energy costs can be rising as well, if not just volatile for sure. And so again, getting a sense of, well, where is our energy use going? And companies have thought about that for a while, but now maybe there's a new urgency and a lot of the same data that they're collecting for sustainability reporting. And so again, a real opportunity to connect the business value in pragmatic lens here.
Yeah, I've certainly seen an increase in the number of CSOs across organisations. And I recall, when we met at the Economist event earlier this year, that there were so many speakers that were CSOs of leading organisations. So, yeah, I think it's fantastic to see, how seriously it's actually being taken across organisations. But there are many organisations that still are fighting to make a business case for carbon accounting that may not necessarily have a CSO yet, and they're still on that journey. Well, what would you say is the business case for carbon accounting if there was an ESG manager who's listening in to this podcast at the moment?
Yep. It's a tremendously important point that it's great to celebrate the progress of some large companies, but I think the reality is still on the ground for most businesses and even mature markets. This is still pretty new, and they may not have the C-suite buy-in yet. They may not even have anybody with a sustainability title or an ESG title. We work a lot, especially early on in Gravity's history, with a lot of facility maintenance managers and folks in marketing and and financial reporting, and people with kind of separate day jobs that maybe are now tasked or kind of like the recipients of the hot potato of sustainability reporting being thrown at them. And so they've got, a lot of understandable kind of new ground to cover, and are sometimes a little nervous about that. So important to meet companies where they are and recognize everybody's at a bit of a different stage of the journey here, and that's okay. But I think if you are, to your point, starting kind of at that more ground floor level of your sustainability journey as a company, I think framing it, that's a real opportunity to frame from the very beginning and from the real get-go about how this is going to help the business. And I'll offer some specifics here, but of course the real devil is in the details of what your own business priorities are and what will resonate. So for some, if they're very exposed to a lot of energy price potential increases and big energy consumers, then trying to understand and orient the sustainability efforts toward energy, toward getting a sense of what's being consumed, what's the energy procurement program, how might there be ways to actually gain efficiencies, and to use the reporting and measurement process to identify and implement those potential efficiencies. That's a big one we see, especially in more physical industries. I think in more consumer facing and maybe those that are more asset light companies, there's often maybe that energy piece, but also importantly, a kind of demand piece and a product portfolio approach to understanding, is there a particularly innovative approach to product building we're already doing that we can kind of quantify and maybe market and kind of make known our leadership as a company. And really just rather than creating a new sustainability kind of like narrative from scratch, really just fitting in with what's important already to the company, I think is an important strategy there. But especially for those who are just getting started, there's a real opportunity to recognize and to build the muscle memory at the company to really show that business value and sustainability should be aligned.
Yeah, we'll come back to that business value in a moment. But I was just in a meeting earlier today, actually, and we were indirectly talking about the business case for ISO 14064 verification. And in our experience over the last couple of years, it's definitely been financially driven, whether that's from an insurance angle and getting better rates for insurance because there's a lower level of risk because you're actually proving what you say that you do and what your carbon footprint actually is. It's not just a case of marking your own homework, but also to get access to green finance. So if organisations are scaling up and growing, but they want to do it in a sustainable way, more often than not, being able to present your carbon data accurately and have that verified, then that does lead to, it's unlocked doors from a financial perspective and also investors as well. That's something that is being requested more and more now. So, I mean, in your experience, how would you say that GHG emissions reporting has helped to drive business value?
Absolutely. And maybe I'll offer a couple of tactical examples too, because I'm a very detailed person and sometimes does help bring things to life. And I think a couple come to mind. I mean, first, just on the kind of energy saving side is, so many technologies, we're fortunate to live in a really exciting time when so many technologies are kind of sweet spots of emissions reduction, but also cost reduction, and also are commercially de-risked and sort of widely available, but are still pretty under adopted. So even kind of basic, quote unquote basic things like LED lighting or the next generation of efficient HVAC equipment, these kinds of things that, most people have heard of, but there's still just often some disconnected dots within companies about assessing them. Everybody's super busy and is wearing a million hats. And again, especially if it's a newer team, maybe who's newly tasked with sustainability reporting on top of a million other things, it can be really hard and time consuming to figure out, okay, but what would this mean for my particular company? And what would it mean for facility number 4 in Cumbria? Like what's the very specific like asset level understanding from a carbon and a financial perspective on what the impact is going to be, who's going to be the vendor in my area, what's the financing going to look like those details, the devil's in the details there for sure. And so the good news is that once, tools can help kind of streamline that scoping process and connect you with vendors, that's a big part of what we do here at Gravity, that we see amazing success. And just as one example, there's a big aluminum foundry here in the US that just at one facility was able to save about $400,000 in energy cost, starting from an initial Gravity energy assessment, but connected to the reporting process to understand like what's going to be the hotspots worth focusing on, who's going to be the vendor in the area, what might be some incentives. And a big success story that kind of helped the leadership of the company recognize that, wow, this isn't just a tick the box exercise necessarily, but without much more work, we can actually get some real value here. Another one being more in the kind of e-commerce industry, where they were standing up essentially a new product portfolio of dishware for consumers, and realized that there was a really innovative approach that they were taking from a plastics perspective that allowed them to, when they had the right data, and to your point about it, something that they could trust and was verified, actually tell a really interesting story publicly and see some business impact from that.
Great. I love the stories that it helps to kind of bring to life, really. It's all well and good talking about value, and different methods for doing it. But it's only really when you hear real life stories and, real cost savings that do actually affect the bottom line for a lot of organizations, that help people to actually relate and to get to understand, what are the business values there. So you mentioned that Gravity helped in terms of completing an energy audit and then helping with the measurements and through the platform. So what advice would you give to our listeners if they're setting up their processes, for sustainability measurement? Because it seems that it's really the numbers that do count.
Yeah.
Counting the numbers is really important. So what should companies be thinking about to maximize business value when setting up those processes?
Yeah, it's a great point that, at the end of the day, and historically, carbon accounting was a really challenging exercise in wrangling a lot of business data, often from a lot of different systems. So things like utility bills to measure the emissions associated with perhaps natural gas you're purchasing to heat buildings, or electricity to run processes or keep the lights on, to business travel and logistics and purchased goods and the kind of capital expenditures, the emissions associated with that. And so oftentimes the business data necessary for tracking each of those endeavors lives in different systems, can often involve historically a lot of reading of documents and fuel receipts until one's eyes glaze over, or shoehorning data into spreadsheet templates and then running manual calculations from there. And so the good news is that there's a lot of tools that can help on a couple different dimensions here. So one is just reaching the data where it lives, and really minimizing the need for that manipulation and wild goose chasing. And so just getting a centralized place and actually meeting the data upstream where it actually lives in its raw format to the extent possible is a really crucial aspect here. But I think just as important, like, you can have the most accurate measurement known to man, but at the end of the day, unless you've also got a perspective and a procedure in place for actually getting value from those numbers, sometimes it really does just sit in a report historically and end up being a tick box exercise. And so we think it's crucially important to understand, to actually embed that more proactive project scoping process into the measurement and reporting process itself. And fortunately, that also doesn't involve more work. It's just a matter of clever systems implementation at the front to say, okay, like, if we know we've got, for instance, greater than 100,000 kilowatt hours of electricity a month at this site, then we could be a candidate for a demand response program. And here's the rough initial cost savings or take-home savings for you, and here's a partner in the area that could work for you, and really just kind of embedding that more proactive value creation really muscle into the reporting process itself, so it doesn't just sit on the shelf, because a lot of the data you're already using for the reporting is the same data you need to actually understand how you can get value from it.
There's some brilliant examples there, Jay, that you just provided for us. That gives everybody, food for thought in terms of, setting up the processes for sustainability measurement in their organisations. So just kind of taking a step back then, looking at the macro political environment. I mean, obviously, this is constantly evolving. The goalposts are constantly changing. 1 minute we've got CSRD, then we haven't. 1 minute we've got the EU Green Claims Directive, then we haven't. And then it's like, okay, well, actually, no, it's on hold. So there is a lot of volatility, obviously, at the macro political level. But what does that impact, do you think? What does that actually mean for businesses when it comes to carbon accounting?
It's a great point that even just at the level of sustainability disclosures, the international organizations that have set out things like NGOs like CDP or standards bodies like ISSB, those have set out the real kind of skeleton frameworks that a lot of these jurisdictions like the EU have then adopted. Like there's a lot of flux there. There's a lot of, fortunately, convergence among the various frameworks to start asking companies for the same kinds of information rather than them all kind of asking for separate questions. But to be honest, as you said, there still is flux here for sure. And a lot of businesses understandably struggle with that uncertainty. We see this all the time of, well, what are we going to be asked for this framework and how might that change next year? And what if our customers are asking us for, overlapping but slightly different information? And so there, I think it just is even more important to have the real core information in a place that's easily accessible in your company, in a system, ideally, that can then do the hard work for you of remapping that to whatever slice and dicing is required for the kind of like disclosure flux. And ideally building that reporting flexibility into the tool as well is important, just so that you don't really have to think about, let others do the harder work of thinking about how all these frameworks map and what the kind of concordance is behind the scenes and what the legislators are going to throw at us next. And rather, set yourself up for success with a more unified, I think, disclosure system can really go a long way.
Yeah, I definitely agree with that, having that unified approach, because I think regardless of who the disclosure is made to, whether it's a governing body, whether it's for an EU requirement, whether it's for, some type of voluntary disclosure like CDP or to get a higher rating on EcoVadis, at the end of the day, it's the same kind of data, really, ultimately, at the foundation when it comes to greenhouse gas emissions reporting that is needed. So I think it's down to the organisation to establish, right, okay, this is our reporting period. And, for some organisations, they have been doing it for years, and the quality of the data is getting better and better and better. I think it's about having confidence in that set of data, being able to have confidence in your carbon accounting report and statement, so that regardless of who you're submitting it to, you've got every confidence in that data. And I think I think there's been a little bit of anxiety and uncertainty around, the reporting and disclosure of information. But at the end of the day, when it comes to the greenhouse gas emissions data, what we're finding is that in terms of the requirements, it's pretty straightforward, and it's pretty similar across all those different types of stakeholders that are requesting the information. So again, going back to having that unified approach for your organisation's carbon accounting and reporting, not only will give your company confidence in the decision making it needs for your own individual sustainability journey, but also making that business as usual, I think, so that when it does come to, whichever stakeholder is requesting the information, it's really simple. It's a piece of cake. You just extract it from, whichever system that you've got. And, in theory, you should already have a report from the previous year and the year before that, and you're disclosing that with confidence. But I think one of the things that we've seen is that the data quality was a little bit rough and ready a few years ago, and in some cases it still is. But we are seeing improvements in that quality of data. So how would you say that data quality and proof of that is affecting, the business case for carbon accounting?
I think they really go hand in hand. And I think it's an area where if all you have to start with are kind of, generic company overviews of, well, we know maybe we can't in our first year get a handle on utility bills, or we don't track those, or there's no kind of kilowatt hour consumption. Maybe we just know how much we spent on electricity, for instance. Then, we can take that and get to a, as you said, rough and ready kind of initial carbon measurement. But then I think important business case is actually pretty aligned with getting more granular data, because the more granular the data, often, not always, but often, the more insightful the actual emissions reduction and cost reduction initiatives can be. And that's really the key linkage to, from reporting to value into action, is getting a real sense of, okay, well, we know exactly what this facility is using. We know year over year what the trends are. We know it's way outside a benchmark for this particular type of utility, or this particular type of facility, this particular region of the world, this particular kind of business. And so those kinds of insights are really, really are extraordinarily valuable for companies, and are often a result of getting a bit deeper on the data. I'd also say, though, companies don't need to boil the ocean. And we often think there are areas of a business where it makes sense to go deeper on and to let technology do the hard work there to help you do that. But there are areas where, you can't do everything overnight, and boil the ocean all at once is just not going to be realistic for companies. And so I think that initial upfront scoping too of where's going to be particularly material, where does trust really matter as well, and what do our stakeholders care about? What do we really want to have a really high level of trust and assurance in from a disclosure perspective? And where might we afford to, do some of that next year or the year after?
And finally, I think it would be good to wrap this up with how carbon accounting software can help with this.
Absolutely. Yeah, maybe three areas come to mind. So one is just that really hard challenge and annoying sort of gnarly details around data collection, data ingestion, and aggregating business data from wherever it lives via analog documents or direct integrations with business systems, just getting it where it needs to go without requiring your team to break their back in terms of data wrangling and manipulation and shoehorning spreadsheets all over the place. The other piece, though, is really just on the calculations. So making sure that the right methodologies are being applied, that there's the right proof behind all of those, that there's the right transparency and data trail for the auditing partners is crucial and historically a big burden. But third, I'd say, and this is perhaps the more exciting lever here that technology can help with, is really embedding that more proactive value stance into that measurement and reporting process. So once you've gotten the data where it needs to go, to actually say, hey, it's looking like there might be some real interesting opportunities here, and have that done on an automated basis that's backed by real vendors, real financing that's relevant to you, not just a generic, don't forget about LED lighting. Most people have heard of it at this point. It's the hard work of understanding what it means for you that tools can really help with.
Perfect. So just to recap on that then, Jay, in terms of the carbon accounting software and how that can help. So it's the data collection and aggregation, the calculation using the right methodology, which is definitely helpful when it comes to the verification, because all of that needs to be completely transparent. And then the third point was embedding a proactive approach to actually actioning these initiatives and changes and automating the process as well, which in theory should take a lot of the burden away on an ongoing basis and helping to streamline and make that process, I wouldn't say effortless, but certainly making life a lot easier for ESG teams.
Yep, exactly.
So yeah, thank you very much for that, Jay. That's been great to discuss the business drivers for carbon accounting and reporting. So yeah, thank you very much for joining me today.
Thanks so much for having me. Great to be here.
Cool. So in the next episode, we're going to be covering how carbon accounting software and verification work together for carbon compliance. So we're looking at bridging the gap there and understanding that as in the next episode of the ISO show. So don't forget to hit subscribe. We look forward to catching up with you on the next episode of the ISO show.
Looking to use ISO standards to drive better business practice? Contact us at blackmoresuk.com to access further information and book your free 15-minute call.